Happy weekend, dear listeners. Welcome to our special weekly edition covering the dramatic events that unfolded in India and global markets from October 6 to 10, 2025. What a week it has been, from record-breaking highs to unprecedented geopolitical escalations that sent shockwaves through markets worldwide. Indian markets, a tale of resilience amid global chaos. Let's begin with our home turf. Indian equity markets showed remarkable resilience during this volatile week, starting on a positive note on Monday, October 6. The Sensex opened marginally higher and gained momentum throughout the session, closing up 583 points, or 0.72%, at 81,790.12, while the Nifty crossed the psychological 25,000 mark, ending at 25,077.65, with a gain of 183 points. This upward movement was driven by strong performances in IT and banking sectors. TCS and Tech Mahindra led the IT rally, while healthcare stocks like Max Healthcare and Apollo Hospitals also contributed significantly to the gains. The rally was particularly noteworthy given the global uncertainties brewing in the background. The week saw Indian markets benefiting from the RBI's decision to maintain the repo rate at 5.5% for the second consecutive meeting, which improved market sentiment after the previous week's volatility. The central bank's neutral stance provided the much-needed confidence boost to investors. Global markets records amidst rising tensions. Turning to global markets, this week witnessed historic milestones alongside escalating tensions. On October 7, both the S&P 500 and Nasdaq Composite reached new all-time highs, marking the S&P 500's 33rd record high of 2025. The tech-heavy Nasdaq particularly benefited from AMD's groundbreaking partnership with OpenAI, which saw AMD shares surge nearly 24% overnight. However, the euphoria was short-lived. By Friday, October 10, markets had turned sharply negative, with the Nasdaq falling 3.6% and the S&P 500 dropping 2.7%, marking Wall Street's worst single-day fall since April. This dramatic reversal was directly linked to the escalating trade war between the United States and China. The Trump tariff bombshell, 100% and rising. Now let's address the elephant in the room. President Trump's shocking announcement of 100% tariffs on Chinese goods effective November 1st. This represents one of the most aggressive trade measures in modern history, bringing total US tariffs on Chinese imports to a staggering 130%. The catalyst for this dramatic escalation was China's tightening of export controls on rare earth minerals. On October 9, China announced sweeping restrictions on 12 of the 17 rare earth elements, including critical materials like holmium, erbium, thulium, europium, and ytterbium. These elements are absolutely crucial for manufacturing everything from electric vehicles and smartphones to F-35 fighter jets and Tomahawk missiles. But here's where it gets particularly interesting. China didn't just restrict the minerals themselves. For the first time, Beijing applied what's called the Foreign Direct Product Rule, requiring foreign companies to obtain Chinese government approval to export products containing even trace amounts of Chinese rare earth materials. This mirrors the same strategy the US has used for decades with semiconductor technology. Geopolitical chess game, why this matters beyond trade. This isn't just about economics, it's a high-stakes geopolitical chess game. China controls approximately 90% of global rare earth processing and 60% of mining. By weaponizing this dominance, Beijing is essentially holding the global technology supply chain hostage just weeks before Trump's planned meeting with Xi Jinping at the APEC summit in South Korea. Trump's response was swift and fierce. He called China's actions extraordinarily aggressive and a moral disgrace, threatening to cancel his meeting with Xi Jinping. The timing is particularly strategic, coming just as both nations were attempting to negotiate their way out of the trade tensions that have defined their relationship. For India, this escalation presents both risks and opportunities. As the world's largest export destination for India remains the US, any broader economic slowdown could impact our export sectors. However, India could potentially benefit from supply chain diversification as companies seek alternatives to Chinese suppliers. The broader geopolitical landscape, worsening or stabilizing. Looking at the broader geopolitical picture, the situation appears to be worsening rather than improving. The Middle East continues to simmer with tensions, despite a ceasefire agreement between Israel and Hamas that came into effect on October 9. While this provided some relief, the underlying conflicts remain unresolved, and oil markets are still pricing in geopolitical risk premiums. The US government shutdown, now in its second week, has added another layer of uncertainty to markets. This political paralysis is delaying crucial economic data releases, making it difficult for both policymakers and investors to make informed decisions. Meanwhile, Europe is grappling with its own challenges, including political instability in France and concerns about economic growth. The European markets have been largely range-bound, with the STOXX 600 showing mixed performance throughout the week. Gold, the Thursday dip and Friday revival. Now let's talk about gold, the ultimate barometer of global anxiety. Gold had been on a remarkable run, hitting new all-time highs and crossing $4,000 per ounce for the first time in history during the week. The precious metal had gained over 50% year-to-date, reflecting investors' growing concerns about inflation, currency debasement, and geopolitical instability. However, Thursday saw a notable dip in gold prices, with Indian markets reflecting this global trend. Gold prices in India dropped on October 10th, with 24K gold falling by 186 rupees to 12 rupees, 229 per gram, providing some relief to festive buyers ahead of Karwa Chauth. This correction was attributed to profit booking after the recent rally and a temporary strengthening of the US dollar. But here's the key insight. This dip appears to be temporary. With the Trump tariff announcement and escalating geopolitical tensions, gold is likely to resume its upward march. The precious metal serves as both an inflation hedge and a safe haven during times of global uncertainty, and we certainly have both in abundance right now. Market outlook: navigating uncertainty. As we look ahead, several key factors will shape market direction. First, the implementation of Trump's 100% tariffs on November 1st could trigger a significant disruption in global supply chains, potentially pushing inflation higher and complicating central bank policies worldwide. Second, the upcoming Trump-Xi meeting at the APEC summit, if it happens at all, could be a crucial inflection point for US-China relations. Any further deterioration could send markets into a deeper tailspin, while any signs of de-escalation could provide relief. Third, India's position in this global chess game becomes increasingly important. Our negotiations for a trade deal with the US take on added significance as America looks to diversify its supply chains away from China. This could present opportunities for Indian exporters, particularly in sectors like pharmaceuticals, textiles, and steel. The investment implications. For investors, this week's events underscore several key themes. First, the importance of diversification has never been clearer. The sharp reversals we witnessed show how quickly sentiment can change in today's interconnected world. Second, safe haven assets like gold are likely to remain in demand. While we saw a temporary dip on Thursday, the underlying drivers of gold's bull run, currency debasement fears, geopolitical tensions, and inflation concerns remain intact. Third, sectors exposed to US-China trade tensions need careful monitoring. Technology, automotive, and manufacturing companies with significant exposure to rare earth minerals could face supply chain disruptions. Closing thoughts: a new era of economic nationalism. As we wrap up this week's analysis, it's clear that we are witnessing a fundamental shift in global trade dynamics. The era of unfettered globalization is giving way to what economists are calling economic nationalism, where trade is increasingly weaponized for geopolitical advantage. 27. The 100% tariffs announced by Trump represent more than just trade policy. They're a declaration that the US is willing to accept short-term economic pain for long-term strategic advantage. Similarly, China's rare earth restrictions signal that Beijing won't hesitate to leverage its dominance in critical materials. For investors and policymakers in India, this presents both challenges and opportunities. We must navigate carefully between these two giants, while positioning ourselves to benefit from the inevitable supply chain realignments that will follow. The week ahead will be crucial. Watch for market reactions as the November 1st tariff implementation date approaches, and keep an eye on any diplomatic developments between Washington and Beijing. Most importantly, monitor gold prices. They may be our best early warning system for how this unprecedented trade war unfolds. That's all for this week's special edition. The markets never sleep, and neither do the forces shaping our global economy. Until next time, stay informed, stay diversified, and remember, in times of uncertainty, knowledge is your most valuable asset. Disclaimer: this analysis is for informational purposes only and should not be considered as investment advice. Please consult with qualified financial advisors before making investment decisions.